Hey, if you've attended any kind of accounting event, conference, or session lately, you've heard it before. The move from compliance to advisory. And there's all these new things that are making the work that we do quicker and just changing the way that we deliver it. There's AI, there's the automations, there's the agents coming now. So once you start digging a little bit deeper in running your business, you start to realize the real opportunity. It's not just doing the work faster and getting it out the door quicker to clients, but it's about serving the right clients better. So over the past few years with One Stop CPA, I've actually reduced the number of clients that I serve, but my revenue hasn't skipped a beat, continues to grow year over year because I focused on delivering more value to fewer clients. So in this podcast, I'm going to share what's working for me, from technology to AI, pricing, systems. And in this first episode, I'm sharing my definition of advisory. So check it out. My definition of advisory, it means getting personal. So everyone talks about advisory, but few people will define what it actually means. So most accountants will think that it means tax planning or giving dashboards, KPIs, and budgets and forecasting with the financials. My definition is different. It doesn't involve any of those things. Advisory is what I call getting personal. So the best advisors often come from the compliance side of doing the accounting, doing the bookkeeping, because that is the closest proximity to the truth that you'll find. The books will teach you about the business and the business owner and their habits, but I want to just share some stories from my history as an accountant. Been an accountant for some time now and worked in some firms, worked in public accounting firms, started my own firm 2017. And I want to just share my story because maybe some of it will resonate with you as we all try to level up from compliance into advisory and try to have that transformation within our own business. So early in my career, I worked at a firm where I was kind of the QuickBooks expert. Anything that would happen with the QuickBooks files, a client sent it a new way. This is when the portable file and the backup files and files would get all kind of mixed up and messed up. We had the remote server. I was the QuickBooks File Doctor before they released that feature. So because of that, I got exposure to some very specific clients because I was the only one that knew how to log in and get their stuff and do their books. I naturally was assigned to those clients. So that was a blessing for me because I got to sit closer in on those meetings with the client and the partner when they would have their annual discussion or their quarterly discussions. We would have to have the books open so that we could have those conversations. So I saw the seasonality in some of these businesses. I saw the major transactions. I saw when the money came in, where the money went out. I was able to get that insight and share it with the partner so that he was well prepared for his client meeting. And I learned about, of course, the seasonality of their business, but I also saw when they got rid of this vendor, switched over to this vendor. I saw when they were purchasing vehicles and equipment for their business. I saw the debt strategy for some businesses and just the overall behavior of the client who was using that bank account, the business card, the business credit card, the business checking account. And the key point there is, I kind of thought, like a lot of us, is that entering in those transactions is the most important part, accuracy, making sure everything was correct. And it is in its own right. And that did also open my eyes to the operations. However, actually keying it in and being able to just read it before a meeting would have been the same for advisory. So compliance became advisory when we started realizing that the partner needed that stuff to have those conversations with the client. The clients would expect insight, but you were basing your suggestions and your feedback on the deliverables. I got experience doing tax research memos. I would do the cover letters to send someone the results of their tax return. I would do research on different tax strategies. And I was doing these like advisory style engagements for in support of the partner so that when he had those conversations with the client, it wasn't about him memorizing like, oh yeah, this transaction was check 28. No, that's not what it was. The clients didn't expect that forensic level attention to detail from the partner. They were looking for his perspective and his guidance. Can you show me the two roads that I'm up against and guide me down which road I should take? So that pattern I recognize, and that kind of led to where I am today and the type of advisory that we offer. So a lot of accounting firms, myself included in the past, we operate like an ER, an emergency room. Clients come to us in crisis, haven't filed, we got this audit pending, sales tax audit, sales tax notice, IRS letters, backed up bookkeeping, payroll that never got ran. And advisory firms are different than those type of firms that I call. Compliance is like operating in the ER. People come in with their wounds and you patch them up, heal them up. You're not really doing preventative care. So advisory firms are doing just that, preventative care, future planning, having those conversations. What's your diet like? What are you doing to make our next conversation have better results? So business design. Advisory is, now the other thing about advisory is it's not just waiting out there. You have to go sell it. You got to go different ways about it, provide education toward your ICP type of client that you want. And this also brings up another story I want to tell you about, same firm that I worked, right? So there were two restaurants that were clients. The firm was kind of a generalist firm. They had clients in all kind of different areas, celebrities, athletes, restaurant owners, real estate investors. It was like all over the place. People own gas stations and stuff like that. But I noticed in doing the books for two very specific restaurants, kind of around the same time, restaurant number one, very thin margins, very reactive. They didn't have any kind of access to capital. It was kind of like the business owner, like leveraging their whatever they had to business going. And they had compliance issues with sales tax. They weren't budgeting for it right. It's just survival mode. And that's how they ran the business. Were there people coming in? There were people coming in every day. They had a busy lunchtime. You would think it was a successful restaurant. The second restaurant, more of a experience type of restaurant. You go in, you sit down, versus the other one was takeout. It wasn't like a restaurant. So restaurant number two was one of those type of restaurants where people would sit down, create a nice experience. They would always be doing holiday events, party planning, that kind of thing. They would invest in marketing. They would buy new equipment. I saw that their employee count was growing and they were investing in more assets, equipment purchases, even though the business was still showing losses. So the reason why is because that business had strategic runway. They had partners that had put up capital. They had a credit facility, line of credit available to tap into for certain purchases. And they really had just a long-term growth mindset surrounding this restaurant and what it was going to do. It was like a 5-year outlook before they even expected it to start paying back some of the investments back. And very important insight there is I would look at the profit and loss and see that, wow, both of these restaurants are bringing in revenue and cost of goods, like similar gross profit margins. So they were both operating kind of the same. They were both bringing in money. They both had their restaurant food and supplies cost under control to where they at least understood that part. But the operating expenses and just the overall balance sheet stuff, the long-term thinking, are you doing this just to keep it in survival mode and keep everybody here? Because now you got people here that are working here as staff that their livelihood is based on you running a good business. And is this business on life support or in survival mode, or does it have planned and expected losses? Is there a long-term growth mindset? And like I said, same numbers, similar numbers on the P&L as far as gross and cost of goods, but different story when it comes to everything else. So advisory for these two type of clients means two different things. Like I said, this is the one restaurant number one is like they're coming into you when they have a sales tax notice. Hey, the sales tax, they actually came to us and said the sales tax office put a notice that they're going to shut us down if we don't get compliant. So now they see the reason why we should get their books up to date every month. The other client, they wanted their books up to date every month for other reasons, because they wanted to shop around getting maybe a second location or getting a line of credit, and they wanted to see if it made sense for what they were trying to invest in, new equipment that would pay returns. So advisory meant getting personal. That's the whole premise of this whole thing that I'm doing here. Is how I define advisory is getting personal. I went into those conversations having the numbers, having those insights from the numbers and the financials available. These are the major purchases. This was the gross profit percentage. Are we up or down compared to last year? How's this month compared to last month? How's this December compared to last December? Fourth quarter this year, fourth quarter that year. Like, those are the type of insights that we came into the conversation with. But to me, those are things that could fit on an index card. Those are small things that you can reference as kind of like a guide when you are having those high level conversations with the client, because if you can understand their personal motivations for what they're doing. The restaurant number one, they were, like I said, they were really just maybe a chef that kind of got in over his head and didn't have the business sense or never set up the right structure in place to have a restaurant that would grow and be successful and have multiple locations. The other restaurant, it was more of an investment. They knew that the restaurant would lose money for 5 years. They would take advantage of the tax savings that would bring them. And sure enough, before year 3, they started to see being able to pay down. They saw that they were profitable. They saw that they were making money, and it became that asset that they wanted it to be. So most reports that you print out of QuickBooks and whatever Excel forecast that you pick out, the main thing is with advisory is getting personal. What are you trying to do with this business? Because I see this going one of two ways for you, and I can help you if that's what you're looking for. If you're just coming into me because you have some kind of compliance filing and you want to get them off your back, that's not going to stop. That's going to keep coming in until one day the business shut down. So, and that's just the truth of the matter. So, and now you're looking for a new client. So what advisory really means is pairing your compliance work that goes hand in hand with it. Of course, we do your books, we do your taxes, we give you tax advice, we give you tax plans so that you know what to do, but also giving them clarity on the different roads that they're facing. Here's road number 1 and here's road number 2. This is what happens if you grow this way. It's a little bit more risky. You're using credit, you're using partnership money. Here's what you do if you go this route. So how growth minded are you? How do you see this thing playing out? Now you're having those type of conversations. You're getting real personal, and you're actually asking this person to explain to you maybe one of their biggest investments, their business, their restaurant that they own. What's your plan for this? How do you see it? Like, let me see the vision with you. And the problem is a lot of accountants, we don't have time. We don't have time to go in and do that. But that's why when you start fixing your business model, when you start billing the right way, you start attracting the right clients, you start seeing that even though everyone could use advisory, knowing when to offer it, and if they say no, how to kind of pull back and not give them the advisory for free, because that's what usually would end up happening is both of those restaurants would just kind of get anytime they had a question or anytime they had something, a fire that needed to be put out, like a sales tax notice, knock on the door, or a line of credit the bank needs to the financials, they would just get it. So being able to draw that line and say, hey, this is compliance, this is advisory. I know how to describe the advisory and package it for you ahead of time, not just this amount of dashboards, this amount of KPIs. Those to me, I see as things that only enhance your time together. They only enhance your time together with the client. They might even be more for you than the client. It's just kind of translating what you're trying to tell them in an easy way to bring them clarity and transparency to the numbers you're providing them. But most business owners, from what I see, they don't need more reports. They don't need more financial models. They need you to get more personal. So when you find that situation where you're with a client and you're helping them choose between A or B, your role is to explain likely outcomes, grade the risk of both options, talk about timing, and talk about trade-offs, because your experience from being in compliance is going to let you pave those roads. I built 10Key because I wanted something that I just couldn't find anywhere else. As accountants, we carry years of knowledge in our minds, but sometimes what's crystal clear to us isn't so clear to our clients. And that's why I built 10Key. It's the advisory platform built by an accountant for accountants. It's designed for instant advisory. It helps you perform live calculations, create easy to understand visuals, and it brings clarity to complex situations. Because the best advisors don't just over explain the numbers, they show them, and they use that to help people make more confident decisions. So if you're ready to level up from compliance to advisory, check out 10Key, named after the 10Key calculator. In closing, compliance matters. Having good books matters. Tax being filed up to date, having a good tax plan, having the right strategy and structure, those are foundations. But true advisory doesn't require those reports. It requires you understanding the person behind the decisions and the business, understanding where they want to go and helping them get there intentionally. Because the best advisors aren't the people who have no idea what the numbers are. They're the people who know and spent time inside those type of systems and knowing how we can extract insights and bring them to the human being level when you're having that client conversation. And I know it's tough. It's definitely a transition for a lot of us. I myself had given away tons of advisory. So one thing I said, that's my tip, is just advisory is getting personal. It's finding out what your client's goals are, and it's painting the picture for them. And 9 times out of 10, whenever they tell you, I'm trying to do this, I'm trying to do that, there's a way where you can support, and then you could get back into the here's how we're going to handle it, here's how we're going to help you in that with our firm's offering. So I think that's powerful for accountants to have that mindset shift of, I do compliance, but I'd like to move into advisory. Being able to have AI come in and do something that you used to do in an hour that can now take 10 minutes is something that should only mean that you have more time to talk to your client and get more personal. So it doesn't mean that the value of those things are diminished, because you still have to do quality control. You still have to make sure it's right. In some instances, you could argue that it could end up taking you longer and you're now spending more time. So it doesn't mean that you should lower your price. You shouldn't be billing by the hour. That's not what my firm does at all. And I think that's kind of going away, or it's like dying out in a way. But finding out where you can get those extra minutes, where you could get those extra hours, and how you can strategically put that into something brand new. You used to just fill up that time with more books, more clients that need accounting and tax work. Find those clients that their accounting and tax work is already done, and find the time to talk to them about advisory. Get personal. Hey, thanks for hanging out with me. If you like this episode, you're probably going to like everything else we've got going on. Check out the links below. Give 10Key a try, hit subscribe, and come back next week. We've got plenty more to talk about.